you get them. So today I want us to look at professional liability. I want us to look at auditor's liability. Now, before you look at the past paper questions, I want you to also assist me check from the link that I've shared so that in case there is anything that you want us to revise, you can remind me or you can send to a group so that we can share. I've sent a link. You can check if there is any past paper question that you feel can be a problem. You can share here so that we can look at it. Now, looking at this particular topic, the topic is auditor's liability. It is a subtopic under topic number 2, which is under professional ethics. So what is basically happening is that auditors like we have a challenge. Sometimes you can find yourself that you're giving a wrong conclusion. You might give a wrong conclusion and then you can end up being sued. So the most important here is to understand the liabilities that the auditors owe to their clients and any other party. So basically, as an auditor, the work that you're doing, you should always remember that you have a liability or an object, you have an objective to give the right results, otherwise you can be sued. Now, the auditor owes liability to 3 people. The first person is client. The second person is third party. Then the fourth person is government or state. These are the people that auditors owe liability. Now the question is, how does auditor owe liability to a client? Remember, the auditor is liable to client to fulfill his main objective, which is to give out the report. So part of the liability to the client is to be able to detect fraud or errors in the financial statement. Unique as the auditor, it is expected as an auditor, you need to check or examine the figures and be able to identify fraud or errors that might exist in the client's statements. That's number 1. You also have a responsibility, we call it responsibility or liability. You're also responsible that you need to always ensure that you do your job as per the contract and complete within the required time. And you can be sued for that if you fail to do your job. For example, if you're given some audit work to do today, they have made a partial payment here 50%, but you fail to do it, the client can sue you because you didn't fulfill the contract. We also have a responsibility when we are doing audit for our client to maintain information confidential. The information that we have should always remain confidential. Otherwise, the client can sue you as well, and you can be charged for it. Now, the liability that we have here is under the law of contract. We have a liability to client under law of contract. What does this mean? We had a contractual obligation. We had an agreement or contract to perform the job, fulfill our mandate, which is to deliver a report. And one of the aims is to be able to identify fraud, to be able to keep information that we have confidential. So that is under contract. The contract is binding us to do what we are expected to do. The second person that we have liability to is our third party. Under third party, we have liability under the law of tort. When you're doing company law, there is law of tort. This basically means injury without harm. Sawa. This means that, for example, if somebody has misused your name, your reputation is bad outside there, you might not be able to do some activities because of such kind of bad reputation. Now, this person who has spoiled your name, you can sue that person under the law of tort, meaning that umeumia, that is the truth, umeumia, lakini not physically. So you are not physically harmed, but umeumia kimfuko. So there is injury without harm. That is what we mean by law of tort. Now, a third party is any person who wants to use your report that you didn't have a contractual obligation to or with, like the client. He's not your client, but he's using your report. Who are these third parties? This third party could be investors. They can as well be employees or management. They are not your client, but they have used your report to make certain decisions. And because of that, they can end up losing in terms of the decision that they make. Maybe they made the decision to invest. And so, because they depended on your report that you said the report was okay, well, it was not okay, they are going to lose some money, they can sue you. So that is what we mean, third party. And so we have obligation to always give information that is right. Now, there's more to understand about third party. Most questions come from here. It is law of tort or negligence. Normally, when we have our insurance, we normally insure motor vehicle. And under the law, the one that is mandatory is not comprehensive. It is normally third-party insurance. Why? Our actions can actually affect third party in many ways. So just like the way you can drive, alafu kanyage matunda ya mtu kwa barabara, ama ugonge gari ya wenyewe. So that is why you need to always ensure under law that you take care of the third party. The same thing happens under audit. You can actually be negligent. Unaweza gonga gari ya mtu because you are negligent. The same thing to audit. You might be performing some work, but you are not paying keen interest, so you are negligent. This means that you didn't ensure due care. You always need to ensure if you don't ensure due care, then that means that you're negligent. And so, for us not to be sued and get arrested, we need to always ensure that we are not negligent, we are always very careful. Otherwise, we are going to be sued under the law of tort because we failed to do something. A good example that is also in case study is a situation in our company law where somebody built a reservoir, like a dam. Alafu dam ikaporomoka. Yeah? So it breaks, then the water starts flooding out to our neighbors. You can actually be sued because you didn't ensure that you take care of the neighbor's property. Are we together? If you have a reservoir, then it actually overflow and the water goes outside, you can be sued by a third party. That is negligent. So for this particular case to go through in court, that is what will come in exam. If they have to set something here, they can ask you, what are some of the things that must be present for this particular case to go through in court? So this one, number one, the third party that's trying to sue you must prove that these conditions were there. Number one, under third party, or for you to be sued under negligence, or under third party liability under third party. Number one, he has to prove that there was a duty of care. You know, somebody cannot tell you liable. You didn't care, you didn't ensure due care. When there was no due care to be ensured, there was nothing to be taken care of. So first you have to prove that there was something that you're supposed to take care of, but you failed. Just like the dam, you're supposed to take care of the dam and ensure that it doesn't interfere with the neighbor. Or your dog, if you have a dog at home, you need to take care of it. Otherwise, it can actually bite somebody and you can be jailed. So we are saying, number one, for this person, third party, to succeed in court, he has to sue you and prove that there was something you needed to take care of. So there was a duty of care. That's number one. But then you didn't actually ensure that. So there was a duty of care. That is number one. Number two, you didn't care, meaning that you were negligent. So there was negligence. Duty of care is basically the property that you're supposed to take care of. But now the lack of taking care of it was also present, meaning that you are negligent. Number three, he has to confirm that he made a financial loss. There was some loss that he suffered. The client must prove that there were some losses that he suffered. He has to prove that there was financial loss that you suffered, and that financial loss can be quantifiable. You can be able to estimate how much was it. The next one, he has to prove that he made a loss, and that loss relates to the fact that you are negligent. So the client, there was a loss that the client suffered, and that loss can be related to negligence. Tuko pamoja? Now in exam, if they ask you conditions that must be met for a third party to successfully sue a professional in court or a practitioner under the law, under negligence, or under the law of tort, then these are the conditions that must be there. Number one, there must have been a duty of care that he was supposed to take care of. Number two, that he was negligent. You have to prove that the practitioner was negligent. Number three, that the client suffered financial loss. The client suffered financial loss. Number four, that financial loss arose from the negligence. So, now, those are the factors or conditions that must be met for this case to go through. Now the second question is, how can the practitioner, who is the auditor, defend himself before the court or before the law? What will he say so that he can actually escape this liability? So you can write defense to liability under negligence. Defense to liability under negligence. This one is very simple. Defense to third-party liability under negligence or law of tort. he has to prove, the auditor can actually excuse himself and say, number one, the conditions that we stated earlier were not existing. There was no duty of care. How can you know that there was no duty of care? As an auditor, you must have been informed that somebody can rely on your report. And so you need to ensure duty of care. If you didn't know that somebody was going to rely on your report, then you don't have duty of care. Are we together? That particular third party must have, you must have been informed that somebody could rely on your report. If you are not informed or you are not aware, then there was no duty of care. Number two, you could have given a disclaimer that this report is only for so and so, so let nobody use it. Let nobody depend on it. Once you've done that, then it means that third party does not have duty of care. Third party do not have to take you to court because you'll say that I owe you nothing, I don't owe you anything. I actually explained and stated that kindly don't rely on this, so it was not meant for you. So that means that there was no duty of care. But there are some reports that are automatically assumed that they have duty of care, like financial statements that are publicly gazetted. That one by default, there is duty of care. People need to have it. It is in the public domain. So you can't say that you see, it was not meant for you. It is meant for the public. That is why it is being advertised or gazetted. But for a private company, like my own company, if the auditor comes to audit it, he gives me financial report, and the client or myself, I didn't tell the auditor that this report will be used by the bank for this purpose and this purpose, then I can actually find a way, the auditor can find a way and say, this report was only meant for Mr. Dennis, not for any other purpose. And I was not informed about anything. I didn't know that the bank would use it. But again, you need to be very careful because for statutory audit, it is under the law that companies should do statutory audit. And one of the uses that you can use it for the public, one of the beneficiaries or users of that particular report is the public. If the client told you that he's intending to use it for some purpose, then you cannot escape. So some two more defense that you can use. Number one, you can defend yourself and say, there was no relationship between negligence. You might be negligent, but then the client made a loss on a different area. You could have been negligent, you didn't ensure duty of care, meaning that there was an error that you didn't realize. Duty of care basically means that there was an error that was existing or a misstatement, or there was something that you didn't ensure that you could get it or discover it. So meaning that you gave a wrong report. So there's a possibility that you gave a wrong report, but that fact, the fact that you gave a wrong report, there is no relationship between that wrong report that you gave and the loss that the third party suffered. He suffered a loss, fine. You also made a wrong report, but he didn't rely on that particular wrong report. He relied on something else, so he cannot sue you. So you can defend yourself by saying there was no relationship between the negligence that I made and if there was any negligence, and the loss that the client has suffered, there is no relationship. Then the next one, the loss suffered cannot be quantifiable. He cannot measure and tell you how much to be compensated. He cannot tell you exactly how much he suffered. That is also another one. So now, the next area where they can actually set an exam is about reasons why most people are now being sued. I'm sorry, somebody is saying that the board is not very clear, but I think the points that I'm giving you can even write without copying from the board. I explain and I repeat and I repeat. If you are very keen, you can even make notes. If the board is not very clear, we will work on our camera. It is our camera. We accept it is our camera. We'll work on it. Pole pole. Lakini sahi, look at the content. If you are available, you are present here. Na unasikiza vizuri, you can use the content that I'm giving you to make good notes and have the points. So I'm sorry for that about the camera. Sawa. We'll work on it, but for now, just try what we can. So I'm very sorry for that. So in exam, they can also ask you that it has been noticed, it has been realized that of late, auditors are being sued. There are a lot of cases coming in court where auditors are being sued by a third party. What has contributed that? What has caused the increase in cases that are coming in court relating to third party? What has contributed to it? That is one thing that they can ask you. Third party wanapeleka, these guys are really taking auditors to court. What could be the reason? They can use the word increased litigation of auditors or lawsuits. Increased litigation or lawsuits to auditors. Reasons for increased litigation or lawsuit reasons for increased litigation or lawsuits on auditors. Yes, that is one. Again, at the same time, Nicholas, you just reminded me, they can ask you, how can auditors reduce cases or being sued? How can they reduce the possibility of them being sued in court? They can as well ask you that. What should auditors do? So the reasons for increased litigation, number one, is that the public is now becoming aware. The public has become aware about what needs to be done, what needs to be in the reports. So whenever they see those ones are not indicated, like if the third party knows that the auditor has a responsibility to ensure that fraud does not happen, ensure that he discloses all the information and does not hide anything at all, then the auditor fails to do that, the third party can actually run to court and say that, you see, this auditor hakufanya hii na hii na hii. So we are saying the increased exposure on the side of the public can actually contribute to a third party, to auditors being sued in court. So that is one. So increase exposure by the third party or by the public. Then you can end up explaining where the public are now aware of what needs to be done and the responsibility of the auditor. The public now knows the responsibility of the auditor, and if the auditors fail to ensure such responsibility, they are normally taken to court. Number two, you can write that increase size of business, increase or complexity of the business. Increase size or complexity of the business. What do we mean here? The auditors are going to audit a company that has been running for a whole year. And the nature of business is quite complex because now we have globalization, where information can be gathered throughout the world and transactions can be done from anywhere. So imagine you are an auditor, you want to verify whether the transaction that happened between your client here in Kenya and another client in the United States, his customer in the United States was legit. How do we even send circularization? Hapa hivi tunapayuka tukisema ati will send circularization to the bank, we can send to the customers so that we get the correct figures. What about a situation where your auditor, your client, is doing transaction with his customer who is based in US? How do you send circularization and ensure that you've done an audit and get the reports at the right time? Can you even afford? So the increase of the nature of business that has become complicated due to the fact that we are even going global. Sometimes we can make errors because we cannot clearly verify. We have to depend on what we have here, which might not be true. They can be fake. And even some of the businesses are so complicated that you don't even understand the nature. You are an auditor, but you've never done some kind of businesses, you don't even understand them. So that can actually make you give a wrong report and you can be sued. Another thing, regulators. We have some regulators that are so strict and they know the responsibility of the auditors. So in case the auditor does not give reports as per their requirement, they can actually take them to court. So we have regulators like CMA, that is Capital Market Authority. They have become more conscious. They are now more conscious on the responsibility in terms of protecting investors' interest. So we are saying that we have regulators like Capital Market Authority. They have now become more conscious on their responsibility to protect the investors' interest. Because of that, they are very keen in the report that has been given by the auditor, and they ensure that those reports meet certain standards, failure of which they actually sue the auditor. The auditor can be sued because they are now trying to assess the report that you've given. Ukipeana report, they don't just take it. They scrutinize such reports. Another thing that makes auditors being sued is the changes in accounting standards and legislations. Changes in accounting standards and legislations. I hope you've written that changes in accounting standard and legislation has also resulted to an increased litigation or lawsuits on auditors. What does it mean? As an accountant, there are standards that keep on changing every day. Like today, we are talking of changes in terms of revenue recognition. How can you recognize that is IFRS 15? IFRS 15 are now being modified. They are talking much about how you can recognize revenue from a contract. Now, those changes keep on coming. That happened, I think, in 2016. We also have IFRS 9 that came in, I think it came in 2019. That is about impairment of financial assets, how you should take care of that and write off financial assets that are considered to be impaired. Now, those are changes that come in. So imagine you are an accountant who did CPA and learned about those standards in 2010, but the changes came in 2016. You need to be always updated. Otherwise, you will give wrong report or treat it in a different way. Then you find that you are in trouble. So we are saying those changes in accounting standards, like those ones that I've mentioned, can actually make you find yourself in trouble. Another one is IFRS 16 that is talking about leases. It talks about finance lease and operational lease, which clearly indicates the differences of treatment. Now, as an accountant, when you're doing a presentation or as an auditor, you need to ensure that you are advising the client of the right way of treating such kind of leases. So if you don't understand that, you did your CPA a long time, the changes have come, you can also find yourself in problems. The next one is changes in regulatory requirements. Changes in regulatory requirements. That one has also brought trouble to our auditors because requirements keep on changing every day. Today, KRA is telling you that you should file return like this. Tomorrow it changes. We also have environmental matters, requirements. So you go to court, you are being told that that one has changed. So KRAs keep on changing things every day. Those are regulators. So regulatory requirements also keep on changing, and sometimes you can find yourself in trouble because you are not up to date. Another one is changes in technology. You can write that there. There's number 1, number 2, we have number 3, number 4, 5. So number 6, you can talk about changes in technology. We are trained as auditors, we are only trained about figures and how to do report. But how to do system audit? You need to have done a course called CISA. So if changes are coming in terms of technology, transactions are becoming more complicated, and even the operations, the risk exposure also. And one thing I I think last semester, they set a question, they were asking, what are some of the challenges that you will face when you are auditing e-business or a company that deals with e-business? What is the challenge? Walikuwa nauliza hivyo. So as an audit, obviously, utakuwa na challenge, ndio? Because you don't even know the scope. For financial audit, you can have the file, you know, this is the end of transaction, ni hivi, nitaangalia hadi huku ndio kunaweza kuwa na risk. But imagine you are auditing a system that does not have any audit trail, like papers. Everything is online. So when you're auditing, you need to know the scope that can be able to cover all the risks that can be available. How would you know that when you don't even know the way that transaction is happening? You don't understand technology. You don't understand the risk associated with it. How can you know the scope? So because of such changes, we can end up giving a clean bill that the financial statements are okay. Kumbe, the mother, the system that contains the financial statement has got problems. So changes in technology also complicates. Auditors do not understand technology. They end up giving bad report, then they get sued. So let's go to that most interesting place. Nicholas was talking about lack of indemnity cover. Now this one is under a situation or things that you can consider. These are part of the things that you can consider to reduce litigation. As an auditor, what do you need to consider, or what do you need to do to reduce the chances of you being sued? Ndio usipelekwe mbele, what do you need to do? How do you reduce liability? That is the last part. Then we go to a question, to all the questions that have come under the same, the questions that have been set under the same. So how to reduce third-party liability? Or basically liability. Number one, indemnity cover or insurance. That's number one. Number two, you can also reduce liability, because liability is not only being sued when you are sued. It is also when you are told by the client that now you need to pay me. So that is still a risk, ndio. Not only wakati umepelekwa ndani, but pia unaweza ambiwa tu bila kupelekwa ndani, umefanya makosa, we agreed, pay us for this damage. Then you want to sort it out. You are going to pay for 10 million. So insurance can pay for you. You insure. The audit funds normally have insurance. Number two, you can do what is called joint audit. When you do the joint audit, you share risk. Sidio, you share risk. Number three, training. Some of these negligence that can make us be sued, they come because we are not well trained, or because we are sending untrained or unexperienced staff. So we ensure that we train people very well. Number three, the next one, we do a review. We need to have a review policy. Audit review. Program. As part of our job, we need to always ensure that we review our audit activities so that at the end of the day, there are less chances of mistakes existing. We review properly. So now you can give me more points. What else do you think we can do? Who can give us more points? How can we reduce liability? You can also arrange with the class to have, it is called liability limitation. I think there is liability limitation agreement, something like that. I lack the exact word, but in case we appear usahau in exam, just talk about liability limitation. What is important is how you're going to explain it. So let me explain it to you. We also have disclaimer number 6. You can give disclaimer. You can give disclaimer and say that let nobody rely on this particular report. It is only for my client, so nobody can sue you later. Liability limitation agreement is where you agree with the client that in case of anything, I will only pay up to this limit. Yani mnakubaliana na client, mimi nitafanya kazi. But in case something is okay, I will only pay up to a tune of 1 million. Beyond that, I don't pay. The client pia nakubali ni hivyo, then mna agree. So mnaandikiana chini so that we can show your limit in terms of liability. But then, in exam, they can ask you, what could be the disadvantage of having such agreement with the client, where you can only be liable to some extent? I saw that in a different paper. They were asking, in such kind of agreement, what do you think is the disadvantage? I would like us to look at that. But in case of any point, you can add here, how to reduce such kind of liabilities. First here, review, limitation agreement, indemnity cover, disclaimer. I think those are the ones that I can remember now. You can also help. In exam, they can set it like this. This particular question, they can ask you like this: how can practitioner reduce their liability? Or they can say, how can practicing auditors, what actions should practicing auditors take to minimize their liability? What actions should they take to minimize their liability? So apart from the ones that I've given you, add the following. Number 7, add proper planning of the audit work to ensure potential risks can be identified. That is another way of reducing liability here. They need to plan very well before they do the work so that potential risks can be identified. The next one, requesting for a representation letter, client representation letter. Unaambia client, mimi sijaelewa hii kitu, lakini wewe put it in writing so that it becomes evidence. Ukienda kotini, unatumia hiyo as evidence so that unaweza epuka, si ndio? So, requesting for client's representation letter. Requesting for client's representation letter. The next one, being independent, or you can say adhering to ethical standards. That is I think number 10 or number 7, number 8, I'm not sure, number 9. But you say adhering to adhering to ethical standards, stroke being independent. You know, when you're not independent, you can be influenced by the client. At the end of the day, you find yourself giving a wrong report. So you need to ensure that being independent. So we talked about that. The next one, being skeptical. Being skeptical, meaning that you are always inquisitive, you are always doubtful. That is another way of reducing such kind of liability. Being skeptical. Being skeptical. Being skeptical when you're doing your work, you don't take anything, you don't take chances. Kila kitu unataka kuangalia na ujue vizuri kwa nini inafanyika vile iko. The next one, getting understanding from the client, or let me say that having an agreement with the client, having a proper agreement with the client where both parties accept their responsibilities. That is, the client and the auditor needs to accept their responsibilities. So in case you gave a wrong report, because you are not given more information to enable you give the right one, then that is responsibility of the client, not you. You used what you are given, but the client failed by not giving you the full information. So obtaining a proper agreement where both parties understands their responsibility. The next one, deal only with clients who have integrity. Kuna clients wako na ujinga, they don't have integrity, they deal in very fake activities or businesses, they can put you into trouble. So only deal or concentrate with the clients who have integrity. Concentrate with clients who have integrity. So then the last one, you can seek professional advice from experienced auditors. or experienced members. Always seek professional advice from those who have experience. Okay, so let me go to the last area. Then Nicholas gave us something about, no, I was talking about where you have a limitation agreement, liability limitation agreement. What are some of the disadvantages? Can you guys try? To be back in some few minutes, we can try very fast. What could be the disadvantage of having agreement with a client that you can only be liable up to some limit? Disadvantages. Disadvantages of limited liability agreement. One of the advantages, we know the advantage is that it reduces your risks. It reduces the auditor's risk or auditor's liability. That is one advantage. But what is the disadvantage? One, it will impair the quality of audit work. Si utakuwa too lazy. As an auditor atakuwa lazy because anajua after all, if I have to pay anything, sitalipa pesa mingi. I can know what I can pay. So I'll become lazy. So the quality of the audit work will be reduced. It will reduce the quality of audit work. Number two, what is number two? So number two and number three are quite close. Number three says that the client might not value your report. The client will not value your report. Client anajua you are going to be lazy. After all, you're not going to be very keen. Since we have agreed, in case of anything, we'll be sorted. So if the client doesn't value your report, that means that even bargaining power for audit fee will be low. The client atakulipa kidogo, after all, he knows that it's going to be a quality report. So that is number two. That may result to reduced audit fees. It might result to low audit fee. It might result to low audit fee. Another one, it can also devalue our profession. As auditors, our profession will not be having name. Hatutakuwa na jina huku nje. Watu najua, hao watu wanakuanga tu hivi hivi. After all, they are making a lot of mistakes and they are wanahepa, ndio? They escape such troubles. So again, our name as professional will be devalued. So that is part of the disadvantages of having such agreements. But in exam, ukiulizwa hivyo, just think outside the box. Ask yourself, if I am the auditor and I've agreed with the client that in case I make a mistake, I'm only going to pay 50,000. Already I know. So meaning that, in fact, in life, normally, when you are making decisions, you always ask yourself, what is the worst that can happen? Ndio? Watu unajiuliza hivyo. Wakati una make decision, unajiuliza, what is the worst that can happen? Then you make decision. So hata hii, you can make wrong decision knowing that the worst that can happen ni hii. So what will be the disadvantages? So because we can always know what can happen ahead, we can actually make wrong decision intentionally. A good example, and that can also be a point, that auditors can make wrong decision intentionally because they can preempt or predetermine the liability. A good example, if I was having two clients One is going to pay me 100,000, we had indemnity. Another one is going to pay me 500,000 or 1 million, and I don't have indemnity. There is no agreement. Of course, when I'm doing these two jobs, I'll concentrate on the one that pays more, hata kama haina indemnity. I'll give him more hours, concentrate and be keen. Juu hiyo pesa ni mingi and there is high risk. But here, yenye najua already, kazi ni 100,000, I can only pay maybe 40 or 20 because of damages. Kwanza naangalia account iko aje. Kama account iko na pesa 20,000, mimi nawaambia chukueni report yenu bwana. I don't care. Watachukua report iko na errors, in case of anything wanakuja wanawaambia, so what do you want? Can I give you 20,000 tumalizane? So that means that we can sometimes just make intentional mistakes as auditors, because already we can determine or preempt what the liability is. So for the purposes of revision, those are questions that have been asked in some years. Let me quote for you, then you go home with them. Just give me 1 minute. I read for you the years where the questions have come from. In fact, the other one also, I forgot, one of the ways of reducing, again, that kind of liability is ensuring quality control procedures. Quality control procedures you can put there. So that question was asked under advanced level. You can write down advanced level November 2016, question 5. That is advanced level. December 2014, question 4 was asking identify 3 parties to whom the auditor could be held liable. Identify 3 parties to whom the auditor is liable. That is December 2014, question number 4. Identify 3 parties to whom the auditor is held liable. Then we have May 2014, question number 2, under advanced level bado. The question was, describe 5 circumstances under which an auditor's criminal liability might arise. Yeah, tujaangalia, but we could have looked at it. There's no time. We shall revisit that. What if you do, wanauliza, ni nini ukifanya, you will be liable. So for example, mutilation of figures, I know you have them in your notes. When you mutilate figures or alter report, when you are aware of transactions that are fraudulent in the client's books, but you assumed, when the auditor, unajua vizuri client amecook financials, but ukanyamaza. That one might make you criminally liable. Those are liabilities. Then where auditor himself contravenes requirements of the Companies Act. The Companies Act, for example, has given the procedures to be followed in the appointment of the auditor. You know very well that you don't qualify, you are not the right auditor, lakini umeenda ukacontribute those Companies Acts. Then that is also another problem. You can be liable. Where you aided the client to commit crime. You assisted the client to hide some things or remove some information. So you aided the client to commit crime. That is also another thing that can make you criminally liable. Sasa, then when you also give false statement knowing it to be false. Yani umeenda ukafanya presentation unasema ati financial statement are okay, the books are very fine, the company is doing well. You give it a clean bill. When you know very well that those things are having mistakes, but you are making false statement just to look people to invest, that one also, you are criminally liable. So imagine, that is what was asked in 2014. Then question number B, they were asking, give us 3 ways in which, ways of limiting third-party liability. This is ways of limiting third-party liability. We talked about having representation letter, quality review, trainings, insurance. Tumesema zote. Hizo tumeona. Ways of reducing third-party liability. Aya, which year again? In 2012, they were asking factors that have led to increased litigation, against auditors. We have given you all that. Complicated accounting standards or changing accounting standards, the globalization, complexity in operation, you know, those are things that we've talked about, changes in laws and regulations, regulators like CMA. Those are the things that they were asking. The same question was repeated in 2011, June. They wanted the same. So just be keen, otherwise I know you have something. Let me go to intermediate level and tell you a few questions that have been set from the same. Intermediate level. The same 2011 December under intermediate, they were asking, every time the auditor signs an audit report, listen to the question, every time the auditor signs an audit report, he is exposed to potential claims of liability by the users of the audit of financial statement. By the users of the audited financial statement. Explain 4 types of liability the auditor is exposed to. The 4 types of liability that the auditor is exposed to. So types of the liabilities that we said, we have liability to clients under the law of contract. We have the liability to third party under the law of tort. Then we have liability to the government under criminal law. We also have liability to the government under civil law. The one for government are 2 liabilities. Civil law, that is the one that you can be sued to pay. Then criminal law, hii utamaliza kotini. Civil law is when you fail to do something that you're supposed to do. Maybe you fail to attend work, you tend to perform some jobs. That is not criminal in nature. It is civil. But criminal liability are the ones that we've explained, where you are trying to mutilate records, when you are trying to aid the client to cause crime. Those things are criminal. Those are criminal liability. So under government, there are 2. Then the second question, outlined 4 arguments in favor of professional indemnity insurance audit to auditors. So what are some of the arguments that you need to argue in favor of indemnity? Now the question is, yes, highlight 2 arguments in favor of professional indemnity. We talked about professional indemnity. What is the advantages? What are the advantages of professional indemnity of insurance, where you take insurance to protect you? Where there is a large claim, the insurance can be able to pay. Then also, it also safeguards the audit firm against the risk of bankruptcy, because they can decide to take all your money as claims, ubaki kama una pesa. So there are 2 risks here. As an audit firm, there is a risk that you can be told to pay. But then they can also, there's a risk that if you don't raise certain amount of money, they can close all your accounts, you remain bankruptcy. But then another advantage is the peace of mind as you perform the work. That is also another advantage for the insurance. Wakati unajua tu kuna insurance, you do your work without fear. That is also another advantage. So hizo wakiuliza kwa exam, at least so long as you know professional indemnity insurance, you should relax and ask Nicholas, can you add me more points? Because Nick anajua hizi vitu. So those are such kind of questions that can always come. I hope we can stop from there and meet in our next class. Areas that we've not covered, we'll continue looking into. We shall continue looking into them. So, thank you very much. See you in our next class tomorrow. 100 shillings per lesson, 1 hour. But I hope you guys are getting something. Are you being confident? Are you becoming confident with exams? Wangapi bado wako na shida? Wangapi wako na tashwishi? I want to see those who are becoming confident, those who feel like they can now request for that paper to come. Bado. You are getting there. You are getting there. Sawa. Only Eric and Nicholas are getting there. Okay, by the end of blocks, you'll be fine. I know. By the end of blocks, utakuwa sawa. See you tomorrow. Thank you very much for attending class. Let's maintain time. Tuanze mapema. Sawa. Kama ni 7, nini, kama ni 1, ikue 1. Not 1:10, ndio wengine wana log in. I'll close the meeting. Allow me to close the meeting. Thank you very much.